Hey, it's Clay, and this will be a video chart on ticker symbol AVEO. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like to do this time frame that does a good job of telling the quote-unquote story of the price, and then makes mapping out where levels of support and resistance a bit easier to see. Pretty rough day here with the gap down, and then the price continued to pull back during the first portion of the day. But this is where the chart gets interesting from a trading perspective, and that is, let me first get this level marked out, where this area here at, let's see, right around 70 cents comes into play. Last time the price, and let me take a step back, this will all mean a little bit more to those of you that have traded for a while, because if you have traded for a while, then you know that when stocks get beat down in a hurry, they can produce some nice bounces. Now, does that mean it's guaranteed to bounce? No, of course, there's no guarantees, but it's at least something that very well could happen. And then you factor in all this being, well, last time the price got down around 70 cents, it made a nice little bounce. And hey, look, the price once again is down around 70 cents. So it at least becomes valid and logical to question, hey, I wonder if the price is going to make another nice bounce. Now, like I said, I really wish I could say that trading was this easy, and I could say that because it's bounced before from 70 cents, it's guaranteed to bounce again. Now, that's not quite how it works, but would it be shocking? No, it absolutely would not be shocking, and it's very logical. Now, had the price never, ever, ever bounced from 70 cents before, and I'm just saying it could bounce from 70, that would seem kind of random, but this is not random at all because there's some history there of it, from bouncing previously. This just goes to illustrate, though, why risk management is so important, because if it doesn't bounce, well, then you don't want this to spin out of control and then, have it, just grind down against you or anything like that. But yeah, from a trading perspective, 70 cents, very interesting level. Now, let's say, the price does indeed bounce. Where are some potential areas of resistance at? Initial level of resistance going to be right up here at the 80-cent mark, which is where that bounce stopped. But this is also where the chart gets interesting. If the price can not only bounce, but then get up there and break through that 80-cent mark, at that point, it's kind of like a miniature blue sky breakout as the next level of resistance, not until up over that dollar mark. Now, am I saying if it breaks through 80 within 10 minutes, it's going to be up over $1? I'm not saying that. My point is just that from a technical perspective, there is quite a bit of space between these levels of resistance. So we'll see what happens with it. But yeah, approaching that 70-cent mark, let's see if the price can repeat history or not. One of the biggest questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.